Good morning, traders and investors. Steve Gans here, and welcome to the weekend update on Mother's Day, May 11th, 2025. So I'm going to go through the different indexes that I normally go through, but I'm also going to add in a trade idea at the end of this video that will tie in with what I deem to be the current market conditions. So please make sure you stay tuned for that all the way through the video. Second thing, if you find this content of use, please subscribe, give me a thumbs up. I greatly appreciate that. It helps me know that I'm on track providing content that people enjoy and is helpful to them. With no further ado, let's start digging into our indexes. All right, so I always like to start off with the S&P 500 index. That is the main index I feel that drives our markets out there at this stage, and is probably the most used one that people look at to try to determine market trends and ideas. And of course, our trend in recent weeks has been significantly up after, of course, these massive down moves on tariff announcements a few weeks ago. So where are we right now? I personally believe that we're coming back into a bit of a resistance area, that kind of green line I have there. The other thing that makes me feel that's possibly a little bit of a resistance area, two additional factors here. One is we're hitting the top of the Bollinger Band. That's that red line here. That is one of the indicators that I use. So we are near that Bollinger Band, which oftentimes indicates somewhat of a reversal point. Another one might be RSI, Relative Strength Index, down here in the bottom right corner. When that gets up in that 60 to 70 range, many times that indicates an overbought market. Now, one other key factor here, this blue line that's down here comes up and across, that is our 200-day simple moving average. That is also a major indicator in our overall markets. When you get what's called a crossover, so that 200-day being a major indicator of the market, when we fell through the 200-day here, we fell with some force, we rallied right back to the 200-day, then sold off hard. Again, right now we're coming right back up to that 200-day, which I suspect may also still be a little bit of a resistance area. Does that mean I think we're going back to these lows? Not necessarily, but I do think that some pullback here or some backing and filling is likely. Now, one item that gives me a little bit of maybe an uptrending sort of look, where these others give me a pause or a downtrending look, is we can see here these green bars. On up days, our volume recently has been a little higher than it's been on the down days. That is a little bit of a bullish indicator. So I'm getting some mixed signals here right now from the S&P 500. Again, it's coming into what I consider to be some resistance areas, but it also is holding up fairly bullish from a standpoint of volume. Now, take a look at SPY. SPY, of course, is going to look exactly the same. SPY is just 1/10 of the size of the SPX, the SPX being the major index, the SPY being the ETF that mirrors that major index. Then we'll look at VIX, which is the volatility of the S&P 500. Now that is coming back down here to lows. That said, it's still at around 21. When we were truly at lows, we were back here at around that 14 range or so. So while volatility has dropped off significantly, it still is holding up slightly elevated. Let's take a look now at the Qs. So Qs, very similar look to the S&P 500, our 200-day moving average. We are right on it here in the Qs. So again, we'll have to see if we break through that moving average. Same story here. When we fell through it over here, we fell pretty hard. Once we broke that average, we rallied right back to it, and then we sold off hard from that 200-day moving average again. Volatility in the Qs we're going to see is pretty similar. It is stabilizing a little bit here at a lower level than it recently has been, but it's nowhere near back around this 16, 17 range. It's still up and around that 25 range. So volatility on the Qs is up there, still elevated a bit. And then we look at IWM, and IWM is nowhere near its 200-day moving average. It has not rallied back as much as the other indexes have. We take a look at volatility on it, and we'll see that it also, while it has gotten lower, it's not anywhere near what it had been back here in the 20s. It's still in around the 25 range. So volatility on IWM is still slightly elevated as well. So what does this kind of tell me overall? Quite frankly, it's painting a picture of some confusion. Markets at a point where there isn't what I would call a clear direction at this moment. Some of our economic announcements that have recently happened, etc., are also leading me a little more into the bearish range. I know there's been a lot of work done on tariffs, but it is still an environment where many companies, as we know from the last earnings season, are basically saying, we're not making any projections for the next quarter. The market and or the political environment is just a little too unstable right now with too many changes for companies to try to model and plan for those changes when we don't know exactly what they're going to be to the good side and to the bad side. So that wraps up the weekend update. I did tell you that I was also going to give you a trade idea based on that update, and I'll provide a link to that trade idea in the description down below so that you can go click on that link and it will instantly open up in OptionStrat for you to view that particular trade that I think could be a reasonable trade in the coming weeks. So if I hold an opinion that I don't think our markets are probably going to go much higher, I think they're likely to chop sideways or maybe go a little bit lower, I might look at a shorter term trade here. So this is roughly a 30-day trade. I think everyone knows I really like the butterfly trade. This is an iron butterfly. And I like the way this sets up because if our market stays in this general range where it is now, maybe even that 565 to 575 chops back and forth in this general range here, this will decay into a decently profitable trade. Now, I do not try to take these trades all the way to expiration. At expiration, this trade can have as much as a $1,400 profit with a max loss of $1,000 if the market rips up and gets all the way up into this range. Of course, if I saw that happening, there would be ways that I would consider adjusting this trade so that I didn't receive the full brunt of that loss. But if our market stays chopping back and forth here from, say, the 560 to 585 range, I should end up with a fairly decent profitability within a few weeks. If the market were to sell off hard, no matter how hard it sold off, I would still end up with roughly $120 in profitability, no matter how low the market goes. So this might be a trade to consider paper trading. Check it out, see how it moves as the market moves. And again, just go below, look for that link, and you'll be able to open up this exact model, whether you have an account or not. And if you like what you can go ahead and open up a free account with OptionStrat as well. So that wraps up our weekend review of the markets.